Good afternoon and welcome to the Longboat Energy PLC investor presentation, which is scheduled for 30 minutes. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and I would now like to hand you over to CEO Helge Hammer. Good afternoon to you.
Thank you, and welcome everyone to our company update today. This morning we announced the 2023 full year results, which we will take a look at, and we will review financials, corporate deals, and the progress we're making in the assets. I'm joined today by John Cooper, our CFO, and Hilde, who is the MD in the Longboat JPEX Norway, and James Menzies, who is looking after our Southeast Asia activities. Before we dive into the financial numbers and technical issues, I also announced this morning that we have two of our non-executive directors, Brent Cheshire and Jorin Setra, have confirmed their intention to stand down from the board. They have been with us from the very start and have always been very supportive and have always offered from their huge experience. We thank them for all their efforts during these years. They will be missed. Moving now on to 2023 and the results. We did two corporate transactions last year. We did the deal with the JPEX, and we did a deal with a smaller company called Topaz that had a position in Malaysia. On JPEX, that was really a transformational deal for our company. It brought in fresh cash. They invested $20 million in two tranches to get 49.9% of our position in Norway and formed a joint venture. They also provide a financing facility of $100 million at attractive low interest rates, and gives us such a strong position for pursuing M&A opportunities in Norway, since this facility also is subordinated, so it can be combined with bank debt. The other corporate deal we did was Topaz, and that was really to consolidate our position in Block 2A in offshore Sarawak in Malaysia, where we now have 52.5%. That gives us a very good position for farming out this huge prospect to big players, and we also have the operatorship that we can offer to big companies like majors, and we'll come back to that shortly. On the operations side or the asset side of things, we did our first transaction shortly after announcing the JPEX joint venture. We did our first transaction with a joint venture, the acquisition of at interest in the Statfjord satellites, one called Signa and the other called Statfjord East. That was the first production deal. It's a relatively small deal, but it showed that we could transact. And what we bought was a project that was underway to drill 5 new wells in a field that had produced for a while. That is now more or less behind us. We have production up from 300 last year to 600 now, and 2 more wells are expected on stream in the month to come. As is sometimes case with these projects, it's taken a bit longer and it costed a bit more, which has been a bit of a disappointment for us and has had a negative impact on our working capital. The project is now kind of in a very, very final phase. And Hilde will explain that shortly. On the other assets in Norway, we have the Kveikje discovery, which is maturing towards development. It's in a very attractive area with a lot of discoveries. And in the same area that's next to Kveikje, we have important exploration well, which could potentially add significant volume to the Kveikje development. And that well, we have farmed out for a full carry, and it's expected in Q3. So the strategy for the company remains unchanged. We are very much kind of in the market to pursue M&A opportunities and deliver material production growth. In Norway, we have the benefit of working together with JPEX, which is also progressing very well, and we have a key well coming, which could have a significant impact on the company. And if we just to also introduce the team, you see 4 of us is participating here today, and we have also Nick, who you met seen present many times before, and Pierre, who is in Kuala Lumpur. I think the one of the main issues here is that this is not like a Norwegian group that is suddenly deciding that they want to do something in Southeast Asia. We actually have a strong M&A team in both regions. James was the CEO of Salamander, has been working in Southeast Asia for years and years, just as I have in the North Sea. And so we have kind of the expertise and the experience that we can benefit from, and the network most of all. So we're in a strong position to deliver growth in both these regions. I'll hand over to John now on the year-end results. Thank you.
Complicated set of accounts for such a small company, with the establishment of the Longboat JAPEX JV. I think that, you know, we've had to, obviously, because it's a genuine shared control, shared board, we've had to deconsolidate that result. So the numbers that I'm going to talk through are PLC standalone without consolidating LJN, and then I'll try and give some colour on where LJN was. So cash from continuing operations, and yeah, they're split between continuing and discontinuing in the balance sheet and P&L because of it completed on the 15th or 14th of July. So there was 3.7 million of cash for PLC, and LJN at the year end had 8.1 million of cash, which is not shown on that balance sheet. It appears we have no EFF debt. The EFF debt is lower than it was in 2022, down to 16 million pounds, and that reflects the lower drilling activity last year and the lower exploration activity. That EFF debt will be paid when we receive the state's exploration rebate in late November, early December, as we do every year. And so, you know, the group goes from having a net debt position, albeit backed by tax receivable, to a net cash position because it's not consolidating. Net G&A was 3.6. You know, that's increased due to LJN, you know, formation costs, the business development activities in Southeast Asia, increased staff costs because obviously more staff running, and we're running around with an operated block in Southeast Asia and doing business down there. And then the loss for the period was 4.2 million for PLC, and that was after showing a 5.1 profit on the disposal of half of Longboat Norge to form the Longboat JAPEX Norge, the Longboat JAPEX and joint venture. I think the only other thing in the accounts that is relevant is the material uncertainty that, you know, we had at the half year as a sort of pre-revenue or company with a limited amount of revenue. That's not entirely unusual. And I think that's it. Helge, back to you.
Thanks, John. Yeah, so just a little bit more about the JPEG's relationship. It's quite a unique proposition we have for Norway, and quite unusual, I think, for a small company like Longboat to team up with a big player like JPEG. JPEG has, the Japanese state as the biggest shareholder. JPEG is looking to grow in Norway, and they teamed up with Longboat because we have strong team in Norway. We have strong knowledge of BD opportunities and can access good quality opportunities. For Longboat, prior to teaming up with JPEG, we had always a dilemma that we would be subject to finance, obviously. Now, having JPEG with us, and particularly with the $100 million facility that is available to the joint venture, we have kind of a much stronger proposition and will be kind of in a much better position to be competitive. We're still very keen to do deals on a bilateral basis. So we're doing a lot of kind of proactive work and accessing the ideal position is production and could be mixed with some development activity. And that's kind of the main M&A strategy that we have for Norway, and we're working together. We have some JPEG secondees in the Stavanger office and have access to a lot of expertise and technical knowledge in the JPEG facility, as well as our own in the JPEG organization, as well as in our own team. So I think it's less than a year since we started this cooperation. We did one deal, and looking forward to doing a more significant deal as our next step. So that's kind of all progressing as we are kind of as we speak, and I'll hand over to Hilde to update us on the progress of some of the assets.
Thank you, Helge. Yes, the addition of our first production fields and also the JPEG secondees and our new colleagues is very welcomed. This small production acquisition demonstrates our ability to access and transact opportunities. It's a small deal, but it's important for us. The reservoirs are located in good quality Jurassic reservoirs next to giant oil fields. There are subsea tiebacks to Statfjord C, currently now having 6 producers on Statfjord East and 3 producers and 1 water injector on Sygna. Statfjord East is a subsea tieback. It has large stoi-up in place when it was first discovered, and because of its subsea nature, it has less wells than optimal on it. And because of that, it had the opportunity for redevelopment. So the last year, we have been drilling 5 new wells and also installed gas lift in these wells and the existing wells. And you can see an outline of the wells, the new wells from the different templates, plus the existing well to the right of this in this picture. So as Helge alluded on, this has been a long-awaited process, getting the production up. So we started looking at this in last year. This shows the production for this year. As you can see, in the beginning of the year, we've been between 300 and 400 barrels per day, producing from 2 wells, the existing producer and with now gas lift, and 1 of the infill wells. And just recently, we succeeded in putting 2 more wells on production, increasing the production to up to 600 barrels per day. And we also have 2 more wells that are expected to start producing shortly. I think it has to be said that the ramp up has been slower than we had hoped for and planned for. And this has, as Helge and John alluded to, caused some negative effects on our cash flow. But the remaining wells are expected soon, and the work required to complete these wells is minor and will be performed by a vessel, not a drilling rig. The drilling rig has left the facilities, so that's over. On Sygna is a nice and stable producer, but smaller than Statfjord East. Moving over to our famous and prolific Kveikje area. We did our Kveikje discovery in 22. That is one of the best discoveries that was done that year. It is in injectites, a very good reservoir. The net volumes to Longboat is 3.5 to 6 million barrels. And the field is part of an area solution for development. And we have a team and we have proven the concept that these injectites works in this area. So we are building our position here. This is one of the most exciting areas on the shelf at the moment, where you have numerous discoveries which are not yet developed, but also a very large activity of exploration wells and maturation of existing discoveries. So this is the place to be in Norway at the moment. So we are building on this portfolio with the numerous more prospects: Kjøttkake, Magnolia, Sjøkrebs, Jasmine. And as Helge already mentioned, we will drill our first APA opportunity, Kjøttkake Lotus, in Q3. That has volumes of 27 to 44 million barrels gross, with a high chance of success of 56%. And here we have managed to farm down for a full carry, and this demonstrates that it's not only us, but also others that are willing to kind of put value on this area and the prospects that we have matured in APA 2022. As part of this year's APA, we have been awarded another successful block together with Equinor and DNO north of Kveikje. Here also it's healthy volumes in this area and also healthy chance of success. So we look forward to mature this prospect together with our operator and partners and to see what the future holds for that. I think I'll now hand over to James in Malaysia to cast some light on what's happening there.
Brilliant. Thank you, Hilda. Yes, so we're flipping over to Asia here, and we're looking at offshore Sarawak. So this is in eastern Malaysia offshore, where Longboat have a position already in the what we call the northern Luconia area. I'll come on to that in a second. But what I like to see on this map is the distribution of the operators in the area. You can see this is a shell. This is a shell-dominated place. And typically in Malaysia, Shell's heartland has been in the East Malaysia area, around Sarawak particularly, and Exxon have dominated in the West. So if you go back in time, you know, they are the big beasts that have held this acreage. And Sarawak has become a bit of a hotspot in exploration terms. So we're starting to see a bit of a tussle evolving between the old guard Shell and some parvenu kind of arrivals that are coming in to try and muscle in. I wouldn't put Longboat in that category, but there are a number of other larger companies who are trying to take a position in this area. And it's really been driven by a series of gas discoveries that have been made in what we call the central Luconia. So it's south of our block, but outboard of all those fields that you see on this map here. And also on this map, you can see the Bintulu LNG plant located right at the bottom of the map. That's so for those who are trying to orientate themselves, the grey land, and we're looking at the offshore licensed acreage. So green blobs are discovered gas fields. All those gas fields feed the LNG plant, which is the second biggest LNG plant in the world. It's got 9 trains. It's a big LNG plant, which is the feedstock for which is in decline. So Malaysia wants more gas. And fortunately for them, in the recent couple of years, they found a lot. So Malaysia had a big hit rate here in 2023. 25 exploration wells, 19 discoveries. I like those odds. That's what I like. And more than half of those were made in Sarawak. So the industry has been looking at this. And, you know, when we picked up our block in that bid round, there was a hotly contested bidding war for some of the blocks south of us. That was where everyone focused. They didn't really look in the northern area where we are. So we were able to pick up our block you know, without too many people getting in the way. More recently, we've seen Total come in announcing a bid to buy out OMV from a joint venture they're in that has got a big acreage position right in the middle of this map. And, you know, as you can imagine, Shell don't really like Total pitching up on their lawn. So, you know, there's a little bit of a turf war going on out here between the big guys. That's all good news for us because our block looks very attractive and it's sitting in an area everyone seems to want to get into. So let's have a look at it. Sorry, before I leave this, one other thing we're doing here, because it's not just an exploration story. The Malaysians are very keen on getting their smaller discoveries worked up and in production. And they realize that most of the investors in Malaysia, most of the companies are far too big for the smaller fields. And there are very, very few small companies of our size that operate in Malaysia. And what they will do, they'll ask you, well, you know, they will offer you some of these small discoveries for development. And these will be awarded by the government to you. So we're not out bidding for them. We're not writing checks to buy them off someone else. These are awarded by the government. If you can convince them you're credible, you have a sensible plan, and you can get these things on stream cheaply, they will give them to you. So we have applied for some of these things in shallow water Sarawak. So we're doing quite a lot around the Sarawak area. So you know, ears open for that. Moving on to our Block 2A specifically, and Kertang in particular, you've heard me talk about it before. It's a giant. You know, it is possibly Malaysia's largest undrilled prospect, with over 200 square kilometers of closure. So it's very large. We have extensive 3D over this and the neighboring structures. And really the work to date has been focused now on where do we drill it, and also what do we expect to find? Because we're 70 kilometers from the nearest well. So trying to unravel the geology within the Kertang structure itself is quite a challenge. We think it's mainly a clastic play in what we call cycle 1 clastics, which is some of the better reservoirs we see in the Laconia area. And of course, you'll have seen the seismic here before. It's got gas chimneys, gas brights everywhere. So we're confident it's gas charged, and we're reasonably confident it's methane charged rather than CO2, given the geochem survey that we have over the structure. I think the other thing to note here that we want to farm it down. You know, we are not in the business of drilling this prospect in 1,000 meters of water at 52.5% equity. So we're very much in the business of finding a partner to come in and do that and carry our costs. And to a certain extent, Petronas look to us as a catalyst to help that happen. They want people like us to come in and bring in new players or bring in bigger companies and kind of get work done, get wells drilled on some of these structures that otherwise may not be worked on for some years to come. So they see us as having a definite role to play, not only in developing some of these small fallow discoveries that I mentioned earlier, but also in bringing in bigger players to get some of this more exciting stuff drilled up. So that's part of our job in Malaysia. That's why we're there. And I think for those of you who follow the sector at large, there is quite a strong theme around the E&P world right now, which is small companies farming out big prospects to majors. And we've seen it particularly in South Africa, Namibia. There's been some notable ones. We've seen a recent one in Uruguay, where Total have come in, Chevron also highly active in that regard, and Shell in Namibia. But this is now almost becoming a theme where you have a hotspot and smaller companies are getting good carries, good results on farm outs to the big players, because they kind of take their eye off the ball with exploration, and there's very little of it left of this particular scale. So we're seeing a lot of industry interest in our project here, and I'm confident we're going to get this farmed out. It will be drilled. It's slated to be drilled. Petronas are very keen to see this drilled. They've got a deep water program. It'll be kicking off in 2025. So we will be part of that program to get a result on the Kertang drilling, probably in 26, but maybe late 25. But anyway, we're being encouraged strongly to bring in a partner and get after this. Just a word on Southeast Asia more generally. Apologies if you're familiar with this story, but what we like about Southeast Asia is, of course, the macro backdrop is very positive. You've got strong demand for energy. You've got a young population. You've got strong growth rates here, much more so than we see in the Western OECD countries. And if you look at the makeup on this slide here, you see that coal, the makeup of primary energy source is dominated by coal in Asia. So there's a huge opportunity here to replace coal with gas, because Asia is fundamentally a gas province. That's how people think of it. I mean, of course, there is oil there as well, but largely you think of Asia, you think gas. So we see a big opportunity here to knock out coal, replace it with gas. Strong demand. These economies look for this fuel to fire their energy demand. It's unashamed. It's not what we see in the West. It's not what we're used to. But that's how they view it. That's how they view the world. And I think for people like us, it's music to our ears, really. Let me hand it back to Helge.
Thank you, James. And just to summarize then, so we made some important steps last year. I mean, we entered the joint venture with JPEX. We did our Statfjord deal to get our first production. We entered Malaysia, which is also a high hurdle for a small company. We're still a small company, but I think we have a fantastic team, a very experienced team, and we are poised to grow bigger. And we are also all shareholders, so very concerned with being diluted. Dilution really shouldn't be on value at all. And full focused on growth. I mean, we've done it before. We were in Faroe or we were in Salamander. Both companies were sold, started off as tiny new starts, and ended up being sold for $900 million, both of them actually. So that's what we are all about, is to replicate those stories. So with that, I'd like to thank you, and I think we have time for a few questions. So I'll actually move straight to Q&A. And starting with the first question here. Given the competitive nature of M&A in Norway, I assume it is easier to acquire bolt-on non-operated production, but would you prefer to acquire operated assets in Norway or Asia? And I think quite answer to that is that, and I think that's a point that our shareholders have made to us a few times, is that we like to use the facility provided by JPEX because it's not so dilutive, and we would love to do that. But the thing is, like in M&A, you don't control the timing yourself. So we have to go after good opportunities when we see them and can find them. So So I think we are very conscious of dilution issues, but we have to go after deals when they're available. Second question, what is the payback period now on the Statfjord satellite transaction? And on that question, just to highlight that the extra cost related to drilling of these wells that we have experienced is all pre-tax. So the actually more than 78% of that, because of the uplift, comes back already in the subsequent year. So the economics of the project is not suffering as much as the working capital. As such, the payback time is not massively different from what it was before. Then we have a question here. When do you think Kveikje could achieve FID? That I think is one I can hand over to Hilde to answer.
I think it's rather than stating an exact time, it's like there's a lot of attention on this project, both amongst the partners and by the operator. There are multiple fields that are coming together here, and those fields are now moving through the different decision gates. With 2029, 2030 is a timeline for kind of first production.
Very good. Thanks, Hilde. And then we have a question on the cash position and the cash burn.
Yeah, I mean, the cash burn, base cash burn is about £300,000 a month, so you can work out where we are approximately. That obviously goes up and down depending, or goes up if we're very active and looking at and diligencing deals. We are active at the moment looking at a number of deals. So, it will be running higher than that. So that's the one answered.
Yeah, thanks, John. Then a question to James here on whether we are in discussion with any parties. It's a very specific question. It's probably difficult to comment on, but if we're looking for a similar partner to JPEX in Southeast Asia.
Okay. Well, the JPEX deal was, it was almost unique. I think it must be unique. I'm not familiar with another one like that in the E&P world. So I think it'd be difficult to replicate that. But I think what we are very conscious of is that I think shareholders in Longboat, their number one priority is Norway. We obviously want to grow in Southeast Asia too, and we see a lot of opportunity there. But we know that shareholders are very sensitive to dilution in Southeast Asia. So we are actively looking at ways we can grow, get deals done that doesn't necessarily dilute existing shareholders in the way that I think they're quite sensitive about. So I think there are some ways we can do that, and we are definitely investigating that. Can I guarantee we'll do it? No, I can't. But we are working on that for sure.
Thanks. And then there's a question here: Is JPEX happy with the progress made by the JV so far in Norway? That's a good question. I think we would have liked. We're quite ambitious together. We want to do much bigger deals. We did this one deal, and we've had some cost overruns and delays on that. So I think both. But we're very aligned with JPEX on what's good and bad, and on the targets we're looking for. So I think we are very, very hungry to do a bigger transaction and use the facility in full. So far so good. I think what we know is that JPEG's commitment to Norway and commitment to grow in Norway is just as strong as it was when we entered the JV. So there is no kind of hesitating or going in circles or making U-turns here. So we're definitely on for a deal in Norway with JPEGs. When we have a question regarding Norwegian acquisitions, are we at risk of looking for the perfect deal when good enough is good enough to get us started? Well, I think we have to be very conscious of having proper return and doing proper quality deals. And doing a bad deal is not helpful to anything. It only creates problems. So it doesn't have to be perfect, but it has to be good. And that's what we kind of continue to remind ourselves of. Okay, I think we'll take another couple of questions. Next one, in what time frame do you anticipate closing your next production deal in Norway? That's unfortunately not possible to answer. I mean, all I can say is that we are constantly looking at opportunities. We are, as we speak, in a couple of processes. So like it's ongoing all the time. When we will be successful next, I don't know. Then last question. Could you talk about the remaining CapEx requirement and production growth profile to 24, 25, 26 at Statfjord and Signa? I think maybe Hilde, you can.
I can. So the majority of the CapEx spend is behind us. The drilling rig has left, and what is required to get these the 2 remaining wells on is a kind of vessel, which is significantly less cost. The production profile, these are new wells, so it's hard to kind of determine what it's going to do. But they are new wells, so we expect them to perform well into the coming years. And one really good thing is that the existing producer is very stable. As you remember from the production chart, it's sitting flat. It shows good stable production, both from Signa and from the 2 wells that has been producing over time. I think that's all I can say on that.
Yeah, and I just to remind everyone that we actually have only 4.5% of this. So it's actually 30,000-40,000 barrels per day fields. It is a big field and a big production rate on a growth basis, and it's going to continue for a couple of decades. So we bought some sort of long-term cash flow, and I think for us also an objective to have a bigger interest in it when we can get that opportunity to own 10% or 15% rather than 4.5%.
That's a very important point, Helge, that this is a significantly old large field, and it has lifetime into kind of the 30s and the 40s. So that's what we're looking for.
Okay, well, I think with that I think we will answer almost all the questions. There's some kind of repeats of questions here, so I think we'll stop it there for today. And I'd like to thank you all for attending. Thank you.
That's great, Helge, Jonathan, Hilde, James. Thank you very much indeed for addressing those questions and updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Longboat Energy PLC, we would like to thank you for attending today's presentation, and good afternoon to you all.